Hello everyone, and welcome to this webinar on how private capital is financing T&D projects. My name is Franny Flinterman. I'm event manager at Solarplaza and in charge of the Future of Energy conference happening on the 24th and 25th of March in Amsterdam, organized in close cooperation with our partner FMO. For those of you who don't know Solarplaza yet, let me quickly introduce us to you. We are a global event organizer founded in 2004. We are based in Rotterdam, the Netherlands, and we've hosted over 250 renewable energy events across the globe. We have a network of over 60,000 renewable energy professionals joining us at those events. So this webinar is part of the run-up to our Future of Energy conference, where we will gather over 500 industry players from emerging markets to join us at the event for 2 days full of learning and networking. So if you are curious about the program, please have a look at our website. Before we get started, this webinar, I would like to share a couple of practical notes with you. First of all, you have the opportunity to submit your questions to today's speakers. You can use the question box for this, that is visible on the right-hand side of your screen. And you can also use this question box for any technical issues you might encounter during the webinar. Our team is here to support you with that. And this webinar is being recorded, and we will send you the recordings and the presentation slides in a couple of days. So today's webinar is being moderated by Jaklitsch Bruyer. She is Senior Investment Officer at FMO. So welcome, Jaklitsch. It's great to have you leading this webinar today. So we look forward to it. And yeah, I would want to say, let's get started. Let's not wait any longer. And the floor is yours, Jaklitsch. I wish you all a very good webinar.
Thank you, Franny, for the introduction. So again, my name is Charlotte Bruyer. I have been with FMO for a few years now, dedicated to energy division in the Latin America region. And I have a project finance background in different parts of the world. And I will be your moderator today of this session. So I'm really glad about that. Thank you, Franny. So what we will discuss is that in the frame of the global energy transition toward cleaner energy, we all know it is very essential to develop a robust and reliable transmission and distribution infrastructure, and that requires large investments. So we're here today to explore how to mobilize private capital to address this T&D financing gap in the developing countries in particular. So for that, we will have 3 panelists today. We will start with Anna Maria Jaklitsch from IFC. She's a Senior Investment Officer in their Global Energy team. Then, yes, thank you. So then Gibbs Johnson from a legal consultant, from Clifford. And finally, but not least indeed, Amol, the Director of Business Development at Gridworks. So each of the speakers will bring their expertise today to provide experience in respect of innovating financing models, policy frameworks, and how to mobilize the private investment for the T&D. We will then have the Q&A session. So please, as Franny mentioned earlier, we encourage you to submit your questions during the session, and we will try to address as many as possible. Before we start, we wanted to just launch a poll asking you, what region of the world do you think has most opportunities for transmission projects? I'm not sure actually now how you see the poll. So there should be different answers. Would you see more in Asia, in Latin America, Africa, Europe, or North America? So we can see that according to the results, it's largely Africa, in your opinion. So great to see that. So maybe let's start with Anna, that will provide us with her global perspective, having been with IFC for more than 12 years, and in particular within the global team for the past 3 years. So she will provide us a global insight and knowledge on the different strategy as she oversees all the regional executions, monitors the transactions, and early stage activities within IFC globally in the T&D markets. So please, Anna Maria.
Thanks so much, Charlotte. Thanks for the opportunity to speak. As Charlotte mentioned, I'm part of the IFC, and given I don't know the audience is familiar with who IFC is, I wanted to quickly speak about who we are. We are part of the World Bank Group. Sorry, could you go to the next slide, please? One more, thank you. We are part of the World Bank Group dealing with providing private sector solutions for private sector development. I think one particularity I would like to mention when it comes to this sector is that we can also work with some state-owned entities, which play a big role in the sector. But this is subject to certain criteria that they have to operate more like a private sector company. Particularly, they cannot have a sovereign guarantee that is provided to them. But it plays an important role here in this context. In terms of products, we on the financing side, we can provide solutions from debt to equity, anything in between, also hedging and can help with mobilizing private capital from other parties. One important thing to mention also in this space is the pre-investment window, where we can help with bottlenecks to basically make projects bankable before they come up. In this context, our experience in the T&D space particularly spans more than 6 decades. We have done more than 60 projects in 30 countries globally. So you can see experience across various regions, both on the investment, but also the pre-investment side. I'll briefly speak about the pre-investment side, which we see a particular importance on the side of transmission projects to basically help with creating bankable projects. I will not go into it too much because we have another speaker later on speaking about these things in Africa, but just to mention 2 things that we are doing on that front. One would be in Argentina, where we are trying to unlock private transmission lines for power to mines. And in Africa, we're working in Mozambique, but this will be part of another speaker. Now, going into the context of T&D financing globally, we are really seeing a complex and heterogeneous sector, which is not very comparable often from one region to the other region, or even within a region from country to country, both in terms of how the sectors are set up, but also how they are financed. And as mentioned earlier, this is a sector, particularly on the transmission side, where we see a lot of state-owned entities, so SOEs, that are still playing in the sector. Yet the need is really significant. By 2040, the IEA estimates that we would need 100 billion per year in investment in the sector in developing countries outside of China, which would be a 4-fold increase compared to what we have seen historically. And this is even made worse by historically the investments in the sector actually having gone down again in most emerging countries outside of China. So the investment gap is widening because there's more and more demand for these investments and less supply. While in a lot of countries in the past, public funding has really dominated, we see more and more the realization that public funding alone will not be sufficient to really fund the full gap that we are seeing. And that's why private solutions are really becoming of more and more interest across the regions. And these private solutions can differ, and we will talk a little bit about that later. The other important role that we see is technology, which both drives the demand either through electrification of industries, the upcoming AI we see in some regions in the world emerging, but also different technologies in the generation space, which are more decentralized and have intermittency issues that we have not seen before. But they can also help with some of the issues of managing and maintaining grids or planning the investments on the grid side. So this is a topic that is becoming more and more important, although we will not necessarily talk about it today. Now going a little bit into the regional differences, which I have mentioned before. When you go through the map, and this is a little bit how we see the world in IFC, you will see huge difference in how T&D sector is managed globally in different regions, but even within regions, not each country is doing it the same. Starting with Latin America, this is probably the region where we, over the last couple of decades, where we've seen the most private sector participation, both in transmission and distribution, and where systems are often completely unbundled and allow for private sector participation and are conducive for that. So often when we talk about good examples, this is a region where we find a lot of them. Europe and Asia are regions which are a little bit more of a mixed landscape. We see often more private sector participation on the distribution side. In transmission, it's often still SOEs, except for some countries where we see more private participation these days. India would be an example, and we'll briefly talk about that. The Middle East and Central Asia is, depending on the country, again, somewhat more bundled. We see a lot of SOEs and public entities still playing in that field. But even there's countries where, for example, in Turkey, we see in the distribution space a lot of private sector participation. And last but not least, Africa is probably mainly still bundled with a few exceptions, but we see a lot of state-owned entities in the space and a lot of regulation that would need some tweaks to allow for the private sector to come in. What we mean by that is that the laws don't often necessarily have to be changed completely, but often transmission is not an activity that now can be undertaken by private parties. On the next slide, I'm going a little bit into what it means to invest in the space. That is really something where we have to look into what form the private sector participation is taking. So for example, to finance an IPT, project finance would be typically the form that is taken, and then you look into how bankable it is. But we would also look into the regulation, because transmission is a highly regulated sector, what the financing markets can provide in certain countries. And last but not least, any requirements that we see in countries for local currencies. So on the project finance side and for IPTs, we have an example in Colombia, which we financed in 2019. It's called ELEC Norte, provided long-term financing in the form of local currency loans towards the line. This was done on an availability basis, which is the most common thing we see for IPTs. We also sometimes see wheeling structures, but they make the structuring of a project financing way more complex. In the last couple of years, we've also seen an emergence of corporate finance, particularly in countries where we have favorable regulatory track record. So where transmission has been conducted by private parties for a longer time, and often where you see a bundle of lines being managed by certain companies. And while this could also be done on a normal corporate loan basis, in recent years, we've seen the emergence of more innovative solutions, like, for example, asset monetization in India, where brownfield assets are being sold to private parties and then financed through debentures, which we have participated in the case of IndiGrid, which is an investment trust managed by KKR. Or a capital market solution, which we have recently undertaken in Mexico, where CFE is selling parts of its receivables to a separate vehicle that is then funded separately through private parties. What are the lessons learned that we have taken from the 6 decades and the projects that we have undertaken? The first one is, unlike in ITPs and solar financing, for example, transmission and also distribution is way more complex and requires a very good track record and expertise, as well as a good understanding of the local market. So for any developers that want to go in, this is really key. For us, when we look into financing these investments, we also always look at the sector as a whole. Our preference is always for cost-reflective tariffs that basically enable a sustainable sector through the long term. And while we acknowledge that in some of the countries we are working, subsidies are key and they are required, it's important that they are clear and externalized, and that it's clearly tracked where the subsidies go and how they fund the sector instead of being hidden somewhere. Then regulatory frameworks are important, since the sector is really thriving through the regulation, and financing only works if the regulation works. That being said, there is a certain requirement to change them depending on anything that happens outside. So for example, we see in a lot of countries now new technologies come in which require an adjustment to the regulatory framework, including the planning and how transmission is put together in a country. The reality is that this has to be undertaken, and there is a need for flexibility, which needs to be in a system to adjust. It cannot remain stable and unchanged for a long time, otherwise it will at some point be outdated. Then when we look at transmission, and that goes again a little bit into the regulation, the tariff architecture is very important because transmission companies are not the ones who are collecting the tariff from the end consumer. It's often other companies that either then put the cash together with money that goes elsewhere, and or there's a risk that the off-taker may default or may not pay. So when we are looking into these transactions, that's a really important structuring consideration, particularly in the case of project finance transactions, but also in the case of certain capital market transactions, like in CFE that I mentioned. This is an important consideration, that the receivables are basically assigned in the right way and go through a cash waterfall. And last but not least, one thing we are seeing globally, and not only in developing countries, but also in developed countries, is that the right-of-way for lines, particularly very long wide lines, can be complex and requires a long and early engagement with the stakeholders in order to basically not hold up projects for a long time in order to be able to build them. I think that's it from my side, and I'll hand back over to Charlotte. Thanks so much.
Thank you very much, Anna, for presenting all these differences across the different region as well of all this model of financing of the T&D projects, as well as the lessons learned. I think now we will move to Gibbs Johnson, the legal consultant at Clifford Chance, sorry. He has been specialized in energy and infrastructure project finance for more than 25 years, based during many years in Africa, in South Africa exactly, so covering Africa, and has been advising in relation to all the aspects of a project development, including the risk allocation, the negotiation of commercial contracts, and the financing indeed. So I think one of the points that Anna Maria highlighted in a lessons learned about the complexity of a transmission project compared to any renewable energy project, Gibbs will provide us more consideration that needs to be tackled to secure private investments.
Thank you very much, Charlotte, and thank you to Anna Maria as well. I think her lessons learned were very relevant for what I wanted to speak about. The slide went too far. I think it will go back. There we are. I have structured what I wanted to say as a series of questions. The questions that we would ask, and that I have asked when I've worked on transmission development. I've worked on this both in the Middle East and in Southern Africa. And it's intended to try and provide additional detail about some of the issues that were mentioned by Anna Maria. My experience has always been that if you have a properly structured project, you will be able to attract capital even in different environments. And what causes projects not to be able to attract the capital and financing that they need is really because they have not primarily been properly structured to address those issues that Anna Maria has raised. So really 4 questions: why, what, how, and when. And looking at them then in that order. Why would you want to, look at private sector transmission development? Why would you look at attracting private capital? It really comes down, I think, self-evidently to 2 questions. One is funding and one is resources. If you had infinite funding and infinite resources, you'd probably just do everything yourself, but we know that's not the world that we actually live in. It's important, I think, to raise that question at the beginning, and then also keep it in mind throughout, because the question then requires you to think about how you structure the rest of it, and the reality that you always need to bear in mind those key issues that everybody goes back to about bankability and investibility, and the fact that as a promoter of one of these projects, you do need to bear in mind the considerations and the investment requirements of your sponsors and of your lenders to make sure that you're meeting their needs. So we have that initial consideration of why are we doing this, and keeping that in mind. The more interesting questions: what is really a question about engineering and technology and those sorts of things. What is it that you actually want to build? I would highlight in that respect that there has been the tendency probably for people to look at transmission projects as serving the purpose of connecting to a new generation source or connecting to a new load. Those are obviously useful activities and necessary activities to be done, but the transmission network is, of course, broader than that, and it is a network. And in order to do the best possible job of building out your network, you need to bear in mind the network elements of it, obviously, and the network values. And one of the things that I have seen is the importance of having proper integrated system planning, and planning your network developments based on what your system planning shows you is going to be needed at different points in time. Avoid the trap of doing something that's quick and easy, or doing something that's the squeakiest wheel, and instead using a systematic approach to your planning that will allow you to demonstrate and extract the best possible value from the investments that you bring in. The reality is nobody wants to fund a white elephant or fund something that your planning will show is needed for the next few years, but then not beyond that, or something that when you then look deeper into your system planning, you realize, well, if we make this investment, then that triggers a need for 4 additional investments that actually we don't at this point have a way to fund or to develop. It is important and critical, if you want to promote these projects, that you have a clear plan and it's a long-term plan, and then that you design your procurements that you're going to do according to that plan. The next question of how do you want to do it? This is really a mixture of your legal environment, your regulatory environment. There are different ways to do them, different countries, different structures. Some are concession-based, some are license-based, some are based on BOTs where you transfer the assets back. Others are build, own, operate. You may have different structures like that. All of those different structures can potentially work, provided that they kind of address those 3 points that I have indicated there in terms of technical needs, operational needs, and financial needs. Anna Maria touched on some of these in terms of how you then manage that with the utilities. And this is then a key point that needs to be decided by the decision makers in terms of what the framework is going to be, and then you run a procurement program that's consistent with that framework. One subject that I do want to touch on a little bit, and Anna Maria touched on this as well, is the importance of certain elements of pre-development work. And in this respect, it was mentioned, very different from other types of energy projects that you might want to do. The role that governments and promoters, national utilities or national transmission operators need to play in catalyzing these kinds of developments is absolutely critical. There are land rights issues and environmental issues that need to be evaluated in the first instances by the governments, by the transmission developers, the transmission system operators, to make sure that they're not going out to the private sector with something that the private sector then looks at and says, well, I don't see any way that this can be done. There are too many hurdles that have to be overcome from a land standpoint, from an environmental standpoint, that it's not going to be possible. It needs to be a cooperative process in that respect, with government broadly defined taking the lead for many of those elements. Then the last question I'll briefly touch on is when. When should you do this? And you'll see that I somewhat tongue-in-cheek just put now with an exclamation mark, although the reality is I think that really is the truth. Particularly in the world where we live now, which, as already has been described, needs transmission development and investment at levels that we've not seen before. Equipment and capital is going to be pulled in many different directions, and the lead times for developing these projects are long. The construction times can be long. The equipment supply can be long. They're complex, they're time-consuming, and if as a government or a national utility you want to attract investment into these projects, you need to start your planning as soon as possible. So those were just the points I wanted to highlight. I'll hand back now to Charlotte and look forward to the Q&A.
Thank you very much, Gibbs, for all this explanation, and also detailing maybe a lot about all the pre-investment work that needs to be done before setting up any framework in the different countries. As you mentioned, this is clearly very complex and needs to be taken care of either from the government or from the developer side, but of course before being able to attract the private financing. Now we will have Amol Pinge, our third panelist, who is the Director of Business Development at Gridworks Development Partners, responsible for originating investment and developing projects on IPT model in Africa, and they have actually developed the first IPT project in Africa. So please, Amol, we will be very happy to hear about your experience. Thank you.
Thank you very much, Charlotte, for that introduction. So, hello everyone. I'm Amol Pinge, Director for Business Development at Gridworks, where I also lead on transmission projects. Just a quick introduction for the audience members who don't know Gridworks. We are a specialist developer and investor focused on the transmission and distribution sector in Africa. We were set up in 2019 by the UK government via its development finance institution, British International Investment, because our shareholder BII saw the need to have a specialist team focused on the transmission sector and distribution sector in Africa. We have an end-to-end project development and execution team consisting of engineers and environmentalists, social specialists, project financiers. So we are able to implement projects end to end. And we have a number of investments in the sector in Africa. So in terms of our portfolio, we, on the one hand, we develop greenfield transmission projects. In that sense, as Charlotte said, we are developing the first IPT project in Africa. It's a project called Amari Power in Uganda. We are also developing the first IPT in Mozambique, a project called Chimora Nakala project, on which I will present shortly. And then we have a wider pipeline of more than $1 billion on the ITP side. We also make investments on the distributed renewable energy sector, in which we have investments, for example, in a company called Anzana Electric, which is a rural utility platform focused on Eastern and Southern Africa. We're also invested in one of the leading CNI developers in Africa called Sustainable Power Solutions. And we are also developing mini grids through a metro grid in northern DRC. So today I would like to speak a little bit about a case study, which is a project which we have been developing in Mozambique for the last 2.5 years. And then I'd like to speak about some of the key learnings and challenges we faced as a developer developing transmission projects in Africa. So coming to the Chimora Nakala project in Mozambique, which we have now been developing, this is a very unique project. So this is firstly a very high priority project for the country of Mozambique. The project itself is a 460-kilometer high voltage transmission line connecting the central and northern parts of the country. It also has 3 related substations. At the moment, this region is just connected by 1 220 kV transmission line, which means that whenever that line is down, the entire region can technically go into blackout. So very, very nationally important line. And that was where we came in with our private sector finance solution to the government of Mozambique and the national utility EDM. And we've been now jointly developing this project along with EDM. And in terms of the project's impact, obviously it helps improve the quality and reliability of supply to the northern parts of the country, but also unlocks more than 600 megawatts of power generation capacity, which includes a large chunk of renewables. The project itself is structured as an ITP, or independent transmission project. And what that means is that contractually, it is very similar to the IPPs in the generation sector. This, from an asset class perspective, is obviously different. So it comes with its own challenges on the technical and environmental side. But from a legal perspective, the contractual structure looks very similar to an IPP. We have structured this on a project finance basis. So the equity for the project will come from Gridworks, and then we will be arranging for long-term project finance from development finance institutions. As you can imagine, this is a very large project, so more than $450 million of total project cost. So we have been, and this includes some of the work we have been doing on the development side as well. So we've done all the development stage work on the project, which includes the feasibility studies. We're also currently conducting on the ground environmental studies and resettlement studies. And then we've also put in place a 5-member team based in Mozambique to implement the project. The project itself is now getting support from the IFC as well as from the US government's DFI, DFC in terms of supporting us with development capital. So we really hope that once this project reaches financial close, it will set a precedent and a reference template for how projects can be structured in a bankable manner to attract private sector investors in the transmission sector in Africa. So coming to some of the key learnings and challenges we as developers have faced in Africa. So one, I would say, learning is that while typically the transmission sector in Africa has been funded using either government balance sheets or using multilateral concessional financing. But in the recent past, we've seen that governments are facing fiscal challenges, and concessional capital also is quite limited. So there is generally consensus emerging amongst governments that private sector financing in transmission is necessary to unlock high priority transmission projects. And we are seeing more and more governments who are willing to engage with us to understand the IPT model better, which we find very encouraging. On the second hand, what we're also seeing in terms of the ITP model, that when we first started, we felt that there may be significant regulatory changes which might be necessary to implement the ITP sector in transmission, because traditionally this has been a sector which has been close to the private sector. But what we found is that in most African countries, where there are PPP acts in place, the ITP model can, with little to no change, directly fit into the PPP acts of most countries. Not all countries, but a significant number of countries where the common misconception that there would be a whole host of changes required to the regulatory regime. We are not seeing that, and we are seeing that it is possible to work together with governments and utilities to implement it with minimal changes to the regulatory regime, which again is a big positive. In terms of one of the challenges which we as developers face is that I think, as both Anna Maria and Gibbs were saying earlier, that the early stage work in developing transmission projects can be quite complex and quite expensive. So things like technical feasibility studies, environmental studies, resettlement studies, these are quite complex, and compared to your renewable IPPs, they can take a lot more time and cost a lot more. So developers would need early stage development capital to fund some of these studies if the utility has not already done them. And this is where we see that while there is a lot of capital available for the sector generally, but specifically for early stage development work, there is quite limited capital available for developers such as ourselves. So, while there are pots of capital which are available and can be accessed, but they are quite dispersed, and it takes about 6 to 12 months to access them. So which means that development timelines can get even more extended if you have to fund some of these studies. So having some sort of a centralized facility of development capital, which developers such as ourselves can access, that can fast track the development process and help expedite some high priority projects as well. The fourth learning would be, from our perspective, that blended finance can be a very important tool to attract more private sector financing in transmission. And as I said earlier, in this environment where there is already limited availability of concessional capital, blending it along with private sector capital can go a long way in implementing a lot more projects, and both at a lower cost as well as with an improved risk return profile for investors. So this is something we feel more and more can play a big part as blended finance to expedite attract more investors to the sector. And finally, again, a point similar to what Gibbs made earlier, which is that it is very important to structure projects properly and in a bankable manner. And any pilot projects which are being developed in transmission should be done in a manner which is bankable, so that more and more investors can get attracted to it. And that includes doing some of the early stage work by utilities in terms of the development work. And what is quite important for that is to have more institutional capacity building in some of the public utilities, so that they're able to implement the ITP model of financing. It can be on the legal side, it can be on the technical side, but this will really help in scaling up the model further. The good news, as I said, is that the ITP model borrows from the IPP model. So contractually, it's very similar. Most utilities who have done IPPs are quite familiar with it, and that helps in the training and learning as well. But that, I would say, is one of the final points I would make, that having this institutional capacity building in public utilities will go a long way in fast-tracking more and more higher priority projects in transmission. That's all I had to say. Thank you very much, and I'll hand it over back to Charlotte.
Thank you very much, Amol, for your presentation. I think you actually wrapped up as well what the previous panelist mentioned. But we can say, as Gibbs had mentioned, if all the pre-work is properly done, the framework, not only the regulatory framework, but all of the rest of the framework are well thought from the beginning and planned, thanks to all of the efforts of the developers like Gridworks and all the consultants, and with the support of the financial institutions like IFC, and which is a very good example, the latest case study we Amol just presented. This is doable, and once we will have more pilots, then we'll create precedents and then can be replicated more and more easily in the different regions. But here we were focusing mainly in Africa. We will now go through a Q&A session. So please submit your queries. I think there is the icon with a question mark on the upper right on your screen. We start with one first question we have. What is the typical development budget for an ITP such as the Mozambique project, given the total cost was $450 million? So I guess we cannot provide like the exact numbers, but maybe Amol, you could provide an idea, and that could bring as well how they can get support from IFC, for example, upfront to help on these development costs.
Yeah, no, thanks, Charlotte. Look, as I said, like I can't go into the actual numbers, but what I would say is that compared to your normal ITPs, there is a large chunk of the work which is required in the development work are the technical studies and the environmental and resettlement studies. And again, this depends on the scope of the project. For example, the project which we are doing in Uganda is a brownfield project where we are only upgrading substations. There is no resettlement of people. Technical work is limited. So those kind of projects can have a lower development budget. Whereas a project like Mozambique, which is 450 kilometers of transmission lines, so the technical studies as well as the environmental studies can be a big component. So there is, I would say there is a wide range. These projects, they run, obviously the costs run in the millions. So it can be anywhere from starting from 2 or 3 million going up to in excess of 10 to 15 million. There's a wide range depending on the cost of the project, depending on the needs of the project. And that's where the comment I made earlier on the need to have access to development capital from institutions such as IFC, which can support developers like ourselves, especially in the initial stages where the risk is highest and where you need to spend those millions of dollars. So we are obviously very grateful to IFC and DFC who have supported us on the project. Thank you.
Charlotte, if I may just jump in there, I think it's another important point to recognize in this regard is, as was just touched on. If from the government standpoint, you want to run a project like this as a competitive tender with an RFP, which is, of course, the objective that people work towards. The reality is, to a certain degree, and Arnold can disagree with me, but if you're expecting people to spend those kinds of money, whether it's millions in the low numbers of millions or more than 10 million, you're not going to have multiple people who will be willing to spend that kind of money just to be able to participate in a tender for a project of that kind, which is where it really then becomes important for government to catalyze, or the utility to catalyze and facilitate that, and go out with its tender saying, this is all the work we've already done. We've spent those millions. So that you don't have to do that and have it done multiple times, which is going to be very inefficient in terms of how you're running your procurement process.
Couldn't agree more, Gibbs.
Yeah, I fully agree, although there is certain ways how you can then share and compensate certain developers, but definitely I agree with not doing it multiple times, because in addition to a lot of money, it also costs a lot of resources, which I'm sure Amol will agree with.
Thank you. Next question. It is related to, so not only you previously mentioned, of course, that the transmission projects are more complex than renewable energy. And the question is how related this is to the SOEs being involved, and due to lack of sometimes bankability and complexity, more particularly, so not just about the other pre-work key element that we've seen, but here in particular with the involvement of the SOEs and their bankability. Maybe Anna Maria, you can provide some.
Yeah, that comes down to the tariff architecture and the point I made that they don't collect money themselves, but it's highly regulated, so you basically need to go through that. We sometimes see guarantees and ring fencing and other structures, so definitely having the SOE there can complicate things, but it is doable. I think more than necessarily just the SOE, because in an IPP you also have the SOE often as an off-taker depending on the country, unless you have corporate PPAs or merchant structures. It's also about the complexity, like Amol said, 450 kilometers of a line. It's very long, so technically you need to understand the terrain. You need to deal with the ENS and then understand how you can manage and bring all of this together. And the local know-how is important. So you cannot copy paste probably what you're doing in Mozambique and just take this and plug it into another country. You would need to adjust depending on what you see. I think that's really where also the complexity comes in.
If I may as well, it's the distances are so key in terms of how you do this, because you've got the long distance. By definition, you want to build it in an area that's not populated, and if it's not populated, you may be very far from roads or from the other things that you need. So you're asking contractors to go out where they probably have to build a lot of this themselves. You can't build just one contractor camp, because as you build your line, you move, obviously, and you have to move your whole entire process as you go along. It's just a very different technical process that you have to go through in order to build this, as compared to building a $450 million investment that's located all at one location.
And just to add over here, that when you compare it to a renewable IPP or even just an IPP versus transmission, once it's constructed, the transmission project, then the risk is far lower than an IPP, or where you're not taking any resource risk, for example. The risks really come pre-construction, where you're, the technical, but more importantly, the ENS risk can be really significant. But once you cross that hurdle, I think then the the risk return sort of profile looks far better compared to IPPs.
Yeah, definitely agree. And I think this relates to the next question, which is addressed to Amol, although I think Anna could jump in afterwards. But it's about elaborating about the blended finance. So maybe how is the blended finance, and what is required to get blended, to obtain blended finance.
Yeah, look, on blended finance side, I mean, just to give you an example, taking the Mozambique project, that has a big resettlement component, and that requires resettlement compensation. So while we would normally structure the project, on a project finance basis, be 75 debt to equity. But then there is a whole resettlement compensation component for which utilities typically would need to secure grant funding. So those are the kind of sort of pots of capital, where if you can use grant funding or concessional funding for resettlement compensation, those are some ways in which you can direct, concessional capital, which would have normally been sort of available for other type of projects, to specific parts of a transmission project, which may not be normally a non-commercial activity, but is still required to implement the project. So that's how we are thinking about sort of using blended finance, whether we are trying to attract donor finance or concessional capital. But essentially our aim is to reduce the project cost for the utility as much as possible, and then find those pockets where that financing can be easily directed, because our motto is that we would want every dollar of concessional capital or grants to directly go into reducing the cost of the project, rather than sort of for any other purpose. So we're trying to find these kind of ways in which we can reduce the cost of the project, but direct the money to specific purposes which are very obviously required to improve the feasibility.
Yeah, just to add, I think there's different pots of money available for different kind of countries, particularly in Africa, which are typically the poorest countries we're dealing with. There's also grant money and so on available, which is often, as Amol explained, taken to buy down certain costs, particularly upfront. But there's also other blended finance pots available that could, for example, buy down some of the capital costs that you have that could be high with subsidized loans or other things. I think on our side, we have different kinds of capital available, and it really depends on the country and the region and the project, which ones we can tap into and which ones are best suited to fund certain things. And again, on our side, because we have this pre-investment window and the investment window, there's again, unfortunately, different types of capital that are available, which sometimes makes it a bit complicated, as Amol explained. But given there is different donors that are behind that, it's necessary to distinguish what you're tapping into and which product in terms of concessional finance you provide.
So if you were to provide an advice to any developer that would want to tap into these different pots, it would be maybe to contact any multilateral or involved in this particular country, right? To provide.
Yeah, correct. I mean, speak to the development country institutions in that country, and they have different pots of capital available and can give advice. It's difficult to generalize because it really depends in which country it is and what project we are speaking about.
Thank you. Next question is actually open to the panel, and it's also related to the financing structure, to understand whether a deal could be structured combining both the generation and the HV substation, for example, and then basically loading the full investment on the generation tariff. So I'm just the panelist here. I'm just the moderator, sorry, so maybe I should not answer the question. but of course it would increase the tariff. So I don't know who would be willing to.
Yeah, I can go. We have seen this. There's different models in different countries. I think particularly for long lines, it's often easier to do it separately rather than fund it with a project together. But there is also models where you would fund it with one project. It would have an impact on the tariff, and then hand it over to the system operator. The thing with transmission lines is often they are not only benefiting one project, but you can feed in from different projects and transport electricity for more than one project over long distances. So that's why sometimes doing it separately is more efficient, but there is ways to also do it together. But as you mentioned, Charlotte, it would have an impact on the tariff that you would see because the capital cost that you spend in the beginning is significantly higher.
Yeah, from my experience, there's a threshold, and I don't know how big it is, but in terms of how much it becomes the percent of the overall project costs, and you do reach a point where you just say, well, no, it makes more sense to separate this out for all the reasons that Anna Maria has said. Another challenge is that, you know, generally speaking, if you build it as part of a generation project, you don't get to take any security over those assets because, as Anna Maria said, they get transferred off to the system operator. If it's 5% of the total project cost, then people think, you know, that's fine. I'm not so worried about that. If it was 20% of the total project costs, then it becomes a much more financially challenging approach. Where that balance is, yeah, I don't know, but it I guess points out the benefits of being able to develop the structures where you can independently finance those projects so that they don't become the stumbling block to getting the generation projects done that you want.
Yeah, and I would add up as well all the points you previously mentioned about, of course, the land acquisitions and all the environmental aspects of a project that are already very complex for a transmission project. So a question to you, Gibbs, is there any best practice that you would have seen to streamline actually this process while maintaining all safeguards?
For the land and environmental?
Yeah.
Yeah, well, I think I mean, from there's a couple of things that I have seen and learned in the different kinds of projects that I've worked on. Both the scenario we were just describing of a transmission project that's attached to a generation project, and then also pure transmission projects. And I'm sure Amol had some of the same experience in working with EDM, who I know well. It tends to be the case that the technical competence within the utilities for the environmental and social parts is actually, from my experience, quite good because they've had to deal with it for a long time in their own projects. So I think the best practice tip that I would give that's the most important is to work together, and it should be structured where you're working together with the specialists from the utilities, because they will have the experience and they will also almost certainly have people local to the area where you're going, which is absolutely critical to successful environmental and social processes, particularly when you have to resettle. And it's often the case that you do. When you get to the load center, a town or city or whatever it is, you're always going to run into resettlement issues, and having the participation and the active involvement of your partners in the national utilities and governments is key, I think, from being able to successfully bring those processes in.
Thank you. I think Fanny is there. It's time to wrap up.
Exactly. Maybe a last word from you, Charlotte.
Sure. So I think we heard Anna Maria just explaining to us all the broader framework of the complexity of financing transmission and distribution projects, looking at the different regions. Again, nothing can be copy-paste from one country to another, not from one region to another, but we can still try to extract some lessons learned As Gibbs was mentioning, very, very important to have the planning and the key elements of pre-work development well done and well structured, thought from day one, to make sure that you can securize the private financing. But the great examples of Gridworks developing and achieving IPT project in Africa is actually proving that I think with a joint effort from the financial institutions, the consultants, developers, and more, and the governments, indeed, that can be done. So I don't know, Franny, I think you will mention now that we can discuss further during the Future of Energy conference in March. I'll leave you those words.
Exactly. I would like to thank you, Charlotte, for your excellent guidance over the past hour. And thank you, of course, to Anna Maria, Gibbs, and Amol for sharing your insights. Also, thank you to all the attendees for sharing your questions. There were more than we could answer in this hour. But indeed, as Charlotte mentions, we will continue the conversation about T&D at our Future of Energy event. So make sure you don't miss it, and please join us in Amsterdam. You can still buy tickets at the very lowest price. Our very early bird rate is still open until October 1st. After then, the prices will go up a bit. So please make use of this and register soon. I would also like to highlight that we have a special rate for some local countries. You see them on the next slide, where all the green countries are at a lower pricing. So please feel free to make use of that if your company is based in one of those countries, and then you can even claim a lower price. So yeah, that's all that I wanted to share. I hope you enjoyed the webinar, and we look forward to meeting you in Amsterdam. Have a great day. Bye-bye.
Thank you. Bye-bye.
Thank you very much. Bye.
Thank you, everybody.